This is the Capital Markets on Channels Television. I'm Edidion Iwang. Welcome to the program. The Chairman House Committee on Capital Markets, Honorable Babangida Ibrahim, says lawmakers plan to address issues relating to the market with the aim of boosting investor confidence. Honorable Ibrahim, who was speaking at the 24th Annual Stockbrokers Conference, also says the Chartered Institute of Stockbrokers Bill is coming before the National Assembly soon. The president of the CIS also made comments regarding the CAMA bill. Let's take a listen.
Market crash. A lot of Nigerians have lost confidence on the markets. That's why they prefer to keep their money in the bank or to go into other investment rather than go to the markets. But what we are doing in the House is that we are trying to look at what are the issues. Because before the COVID-19, we wanted to plan an international investors conference where all the key players will come in to discuss what are the challenges. Are they policy, are they legislative, or are they operational? So that when we discuss all those issues, if it has to do with legislation, the National Assembly is ready to look at those areas that require amendment in order to improve the efficiency of the market. If it has to do with the policy, we advise government that social policies need to be revised. If it has to do with the operation of the market, then we ask the key players, please, these areas you need to improve on it because the investors have lost confidence because of lack of return on their investments. So these are some of the issues we are looking at, and we learned that the CIS amendment bill is coming to the National Assembly. There are a lot of challenges associated with the bill. But what we learned they are doing is discussing within the key stakeholders that have some reservations on the bill to discuss so that all of them will be on the same page.
The new carbon law that has been passed, incidentally, he was one of the private sector participants that assisted in birthing that new law. All right, and he mentioned specific provisions that he feels that if they are well implemented, has the opportunity to put the country and its businesses in a very competitive position. All right, as I've mentioned before, capital will seek the best opportunity where it is best served. There's no quota system when it comes to allocation of capital. All right, so capital will seek the environment where it feels that it is best served. So clearly the old CAMA law has been around for over 2 decades and proved that up. And within that period, competition and industry continues to evolve. All right, so we needed a law that also, a CAMA law that also evolves with competition to ensure that our companies in Nigeria also, are able to compete globally. Because the world is a global market. And with the new CAMA law, all right, there are provisions there that will enable our companies to be able to, remain competitive, create jobs, all right, be able to get the capital they need to actually grow their capacity.
Lately, the stock market has surprised Nigerians with bullish sentiments for a couple of reasons, one being the reporting of third-quarter results by some listed companies. The other reason for the recent gains in the market has been identified as the low yields in the fixed income space. Now, these reasons put together has held the benchmark index of the market above the 30,000 psychological position as seen at the end of October and now seemingly driving through November and perhaps the rest of the year. But these are some of the questions that a professor of capital market and the president of Capital Markets Academics of Nigeria, Professor Uche Uwaleke, will be joining us on the show to address this evening. Good evening, Professor. Thank you for joining us on the program.
Yeah, good evening, Edidion. It's my pleasure being here.
Before we delve into the trading week and earnings and what's driving the market, with the destruction and burning down of government structures following the fallout from the Lekki shootings, government will need to raise money for reconstruction. Do you think that that could be done through the capital market?
Yes, of course, I think so. Especially now that, borrowing rates are low. Just as you rightly mentioned, the yields in the fixed income market are low. And so for the government, borrowing from the domestic economy would appear cheaper than, than it used to be. Let me also add to what you said earlier about the factors that have been responsible for the bullish, somewhat bullish trend in the stock market. Now, apart from what you mentioned, which are largely endogenous, yes, the fact that yields in the fixed income market and other asset classes are actually low. There is also the external front, the fact that we have relative stability in oil price, because that is key. And the fact, too, that Nigeria, unlike other countries, appears to have contained the COVID crisis. Now, as we speak, part of where you find market performance in other parts of the world, especially Europe, still down, is attributed to the rising COVID cases and the increasing wave of the virus, as well as the lockdowns and restrictions that have followed that. So in Nigeria, that hasn't been the case because, as I said, number one, the crisis appears to be contained. And then number two, we're also witnessing some stability in oil price. And of course, that fits into the external reserve and the pressure in the forex market, which is a lot easier now than what we used to have in the past. So all of this have contributed to the stock market performance that we have now, such that the index has gone above 31,000, market cap over 16 trillion. And then you have the bellwether stocks, doing well, due in part again to what you rightly mentioned, corporate actions. They appear to have, some fundamentals, driving them.
Professor, just like you rightly said, how long is this bull run likely to continue? I mean, yes, it might seem that we have the pandemic contained now, but even the federal government is warning that there may be a surge. So how long is this bull run likely to continue?
Well, in a discussion I had recently, the issue was, are we having a bubble? Is this really a bubble? And I said, I don't think so. You have a bubble in a situation where the market price is not reflective of company fundamental. You have a clear case of mispricing, which I wouldn't conclude for now. If you have a stock like Dangote Cement, for example, selling as high as 174 naira, so last time I checked, or GTB at 33 naira, for example, or Zenith, or some of these bellwether stocks, okay, it would be too early to conclude that they are witnessing a bubble, especially when you look at their 52-week high and in relation to 52-week low. That's on the technical side. And on the fundamental side, you're also looking at the results that these companies are churning out. MTN, as you know, has performed well in spite of the COVID for understandable reasons. People have used phones even during this crisis. The banks also as well, especially the big five, the ones that are now referred to as the FOGAs. Okay, they have also done relatively well, and they are the ones driving volume in this market. As I observed, not too long ago, that you have about 160, 166 companies listed, and just 5 of them, make up 57% of the market capitalization. Talking about MTN, Airtel Africa, Zenith, Dangote Cement. So if you have these 5, constituting the larger bulk of the market, you have that means your market is concentrated. So anytime you have one of them or a few of them going up, of course that pulls the entire market. As we saw recently on last week, we saw Dangote Cement, for example, appreciating by as high as 9%. So that's pulled the market to of course, close on a positive note. The market ended last week, I think, at 1.5 week on week, 1.59 percent. So, how long is it going to last? Well, if you look at the factors that have driven performance, one, corporate results. I also talked about relative stability in the forex market, stability in the oil price, and then the fact too that in recent times we've seen some form of, if you like, liquidity surfeit in the system, by the central bank redeeming some bills, from the market. So how long will it last? That will depend on the extent to which the economy experiences shock. In October, we had this shock, but the shock, thank God, was short-lived. I'm talking about the EndSARS crisis. The EndSARS crisis happened. It got to a peak on a Tuesday when we had that shooting. On the following day, Wednesday, the market reacted by dropping by as much as I think minus 7.5%. Although it also picked up because, as I said earlier on, the crisis was contained. So as long as we don't have any crisis, as long as we don't have any economic shock, okay, I expect that yes, the positive sentiments will remain, but of course, by and large, it's going to be mixed. Mixed in the sense that liquidity surfeit may not continue. Corporate actions, earnings seasons may have been over, for example, and then we are also pushing towards the Yuletide. What usually happens during the Yuletide, if our experience is anything to go by, is that you have investors who tend to sell off. They sell off because of liquidity preference, cash preference, because they want to have cash to meet needs during this Yuletide. There's also January approaching. There will be payment of school fees, and so on. So yes, the the momentum may not be as strong as it is now, but at the end of the day, I think I'm optimistic that our markets, unlike what is obtaining globally, will still end up in the positive territory. Because if you look at global stock performances, even if you take the basket index, the Morgan Stanley Capital Index, whether for emerging markets or for frontier markets, they are all in the negative territory, yet YTD. If you go to the US, for example, Dow Jones, S&P are also in the negative territory YTD, except for the NASDAQ, for understandable reasons, where you have tech stocks that have appreciated by as much as 39%. In Europe, it's the same story. London FTSE 100, German DAX, France CAC is the same story. In Asia, the Nike 225. So what I expect to happen in the case of Nigeria between now and December is, of course, we are going to have mixed performance up till the end of the year. But by the end of the year, I expect that our markets will be one of the top 5 performances in the world. We have seen that the market is already ranked one of the, I think, first three in the world by recent reports, that I saw, using the OSHA index as a measure of performance. So I think relative stability in the economy and the fact that confidence is also gradually returning, to the economy. How do I know? How do I mean? You use look at the VAT revenue that the FIRS made in the Q3 of 2020. It recorded a 29% increase from what it was in Q2, over $400 billion as opposed to $300 billion that was gotten in Q2. And what is VAT? VAT is a consumption tax. So you can use that as a gauge for consumption. So we're having an increase in consumption, in the economy. If you also take the Purchasing Managers Index, yes, it's still below the 50 points threshold. Could you just hold your thoughts
on that? Let's just go on this quick break and we'll continue this conversation when we return. Welcome back and thanks for staying with us on the program. Professor Uchewu Aleke, a professor of capital markets and the president of Capital Markets Academics of Nigeria, is still with us on the program. So, Prof, just before we went on that break, you mentioned corporate earnings as one of the drivers of the market. Now, while we wait for the Q3 earnings from lenders, especially Tier 1 lenders, What is your assessment of the earnings of the industrial goods stocks that came in? We've seen results of Dangote Cement and Bar Cement. What do you make of those figures?
Yes, as I mentioned earlier, the Dangote Cement, for example, is one of these stocks, that drive the market. So the performance of Dangote Cement is also reflecting in the price of Dangote. So that is not a surprise. The same thing with that of, if we move to the agri sector, for example, that of Presco. Presco's results, whether in terms of earnings or in terms of profit after tax, showed an improvement. And that's also showing up, on its price. It's also understandable what is happening to stocks like Ikeja PLC, for example, that, of course, recorded or reported a huge decline. Ikeja PLC, hotel industry, we know what they suffered during the COVID and what the hotel industry, is still suffering. Ditto for a company too like Resta Express, a courier company. So these are, if you look at the sectors that were hard hit, during this COVID, those are the sectors too that reported a huge decline in earnings. But on the other hand, you have the banking stocks, for example. Yes, we are still awaiting that of the big five in particular: First Bank, UBA, GTB, Access, and Zenith. But you can also hazard a guess as to what that will look like from their Q2 earnings. These banks have already declared interim dividends. So it's also expected that their Q3 performance will not be too far apart from what the trend has been. So by and large, yes, earnings have been influencing stock market performance. But as I said, it's not just about earnings. It's also about the fact that in terms of having competition or competitive products, okay, the equities market now appears to be favored, appears to be the preference of investors, since the returns from the other asset classes, are low. So we need to, put that in context. Also bear in mind that domestic investors are the ones driving the transactions now, unlike what we saw last year when foreign investors, had dominance. So because domestic investors are the ones driving performance, you have institutional investors, pension funds, for example. Okay, these ones will, of course, show interest in places where the real rate of return is positive. Inflation rate is 13.71% today. And if you check the All-Share Index, the year-to-date return, as of the last time I checked, it was in excess of 15%. So we have positive real rate of return coming from the equities market. Compare that to what you find in, say, the, I don't even want to talk about money market or treasury bills, where yields are very, very low, 0.5%. Then you have bond market too, that is also low. So the option now for investors, appears to be equities. And as I said earlier on, I think going into the future, the picture will be a little more clearer, especially now that we have a lot of clarity. I would say we have some clarity in the economy. Clarity coming from the fact that the 2021 budget proposal, has been laid before the National Assembly in good time. Coming from the fact that the government also appears to have a handle on some of the policy measures that people had wanted, before now. That's talking about the petroleum subsidy removal, and also on the part of the central bank, the gradual unification of exchange rates. So all of this will be positive for the market, going forward. And on the external side, I also see, it's important I mention it, I also see a Biden victory, being positive for not just the Nigerian market, but also global markets. And as you know, Edidion, before now, global markets had betted on a Biden victory. And that is what appears to be happening, because a Biden victory will mean that the trade tension, for example, between China and the U.S., which usually negatively affects markets, will be eased. So if you ease the trade tension, once there is a free trade, again, that also reminds me about the WTO. It also means that the WTO issue, stands to be resolved as quickly as possible. So once you have free trade, you don't have trade tensions between the two world economic powers. Okay, that will be positive for markets. Another advantage that Biden victory, has is that there is this general perception that Biden will handle the issue of COVID, rising COVID cases, better than Donald Trump. So with these two factors, I expect that there will be stability in the U.S. economy, and of course that will rub off positively on our markets. Remember, Gideon, that the bulk of our capital importation into this country, usually comes from the UK, number one, as a major source, and then the US. And that is why it's also important to us that these two economies, enjoy some form of stability, so that foreign investments can come from them, and diaspora remittances too, which also come from these countries, can continue to come. So by and large, I see a stock market that will continue to give returns to investors in the near term and even in the medium term.
Prof, just before I let you go, because we're running out of time, I'd just like to get your outlook for next week. What should we be expecting from the markets?
If you look at the previous week, the market ended on a positive note the previous week. This week as well, I told you week on week was 1.59%. And if you recall, the last week, the market showed very strong appreciation on a Friday, recording 3.71% gain. Okay, so I want to see a situation where the coming weeks, especially next week, will also be mixed. This week we had 2 days of loss and 3 days of gain. Monday was a loss, and one other day. So next week will also be mixed. In response to, it should be expected. Once you've seen stocks rise, you should also expect that there will be some profit taking by investors who want to take advantage of the fact that stocks have risen to get some profit. But essentially, there will be stability in the market, and I also see the market ending on a positive note next week.
All right, Professor, thank you for your input on the program. Do stay safe.
Thank you very much.
Professor Uche Uwaleke is the president of the Capital Market Academics of Nigeria. Well, that's it on the program tonight. Thank you for watching. I'm Edidion Iwang.